Let's see how this works. We're getting ready to go live in about 30 seconds. Just realized. So it'd be hard looking at the two cameras, so I'll try to go back and forth between the two. And hello, South Florida. Welcome to another live edition of the Real Estate Show. South Florida's #1 program and America's longest running daily radio show about real estate. We are heard live Monday through Friday. That's 5 days a week right here on our one local AM station, 3 local FM stations on the iHeartRadio network, as well as on our website at automaticlandlord.com. That's automaticlandlord.com. And as an ongoing experiment, we're also broadcasting live over here on this camera here for the our Facebook Live on our Facebook page, which you can find at The Real Estate Show. It's The Real Estate Show. And over on this camera here, we're on the YouTube channel, which we're just building up our content over there. Haven't really launched that officially yet, but just if you want to look up The Real Estate Show, we're over there as well. So here we are, TGIF, TGIF, TGIF. Thank God it's Friday. Thank God it's Florida. And as far as the week goes, thank God it's finished for many people. Now, we've had a very busy week going along here, and covered a lot of ground here during this week. Now, actually, it was a shortened week when you think about it, because Monday being a holiday for many people. Can you notice the difference on a holiday when you are working at home? Those of you who might have celebrated the holiday away, as I did, went away for a few days. And so it did feel like a holiday, but certainly that meant also a shorter week. And a shorter week meant we have more ground to cover in less days. 5 days of work crowded into 4 days. And when you throw in the fact that spent 1 day down at one of our projects, it really crunched the week. And then started at a conference today for one of our product brokerage companies, a very successful 29-year-old company that was doing its international conference live via Zoom. So literally had hundreds of folks attending. I guess it's kind of like the presidential debates, different people came from different locations, but there were clusters of groups of people who were having viewing parties, and they did have an audience and a studio at the headquarters where they were transmitting. So it's all part of the new quote unquote normal. Now you show me what normal is, and then we can talk about new at that point. Anyway, each day of the week, as you know, we focus on the overarching conversation that we're having in real estate right now. That conversation is about the real estate market. What's going on with respect to, is the real estate market opening up for evictions? Is it not opened up? Last week they dropped the bomb and involved the CDC in this whole thing. So on Tuesday, we got a little bit more in depth and talked more about how the CDC involved in real estate, two completely different conversations you would normally think. How the CDC is now driving, helping to protect not only your health, but your real estate, and now extending the moratoriums in many cases. Now, here's the important thing to understand, and you can listen to each one of our shows in their entirety by going to the website at automaticlandlord.com. That's automaticlandlord.com. and go to the top of the page up there on the left. And it just moved because we're doing some construction on that page right now. But it moved over to the left. You just click on the real estate tab. You'll have a drop down. You can listen live, as you could be listening there right now. If you're listening there during the 8 to 8:30 p.m. Eastern time zone, or you can listen to any one of our past shows. Now, the Tuesday show, as I mentioned, we really went more in depth in regards to the CDC's extension of the moratorium. And what's very, very interesting here is that while the CDC now can step in on a national basis, there are a number of conditions. I covered those in the Tuesday show. And basically, the tenant and the landlord have to fill out certain paperwork, and in which, if they expect to have any kind of a support or assistance, and it has to be COVID related. So just not wanting to pay the rent. And there are a number of stories that I'm hearing now of folks that are abusing the COVID situation to not pay their rents. So if they go to court, now we're working with one landlord right now where they're proceeding to go to court. And so we talked a little bit about, here in Florida, for example, I can speak to in much more specific terms. Check it out in your own area. But if there are any violations of the lease other than payment, you see the payment, they can allege that they have a COVID hardship, but they're going to have job verification demonstrating either that they lost revenue, lost income, reduced hours, or got the actual COVID illness. If they were COVID related, then the CDC will protect them. If they can't come up with that proof, then the judges are going forward, and that's in relation to the payment. But if it's not payment related, for example, unauthorized pets on the property, unauthorized tenants on the overstaying, the lease that ended, all of those, the judges are going forward because those are not COVID related instances. Those are abusing your current situation and trying to take advantage of the landlords, the banks, and the system. So Tuesday was a very interesting show there. That's usually our tools, tips, and techniques, and there are a lot of good tips, particularly for landlords, and also some for people who are in the forbearance program. Speaking of which, in the forbearance program, well, let me wait till Thursday when we get to our Thursday show when we talk about that one, because the forbearance has really tripped up. Here we are, interest rates are now below. That's right. Interest rates are now below 3% fixed for 30 years. Again, another amazing fact and something that I think can make a big difference for a lot of people. Good luck if that's the case, and I hope that helps out a lot of people out there. By my last recollection, just under 20 million people are in a position to benefit from refinancing. So if you're not sure, you're always welcome to give us a call. We're happy to talk to you on a one-on-one basis, give you some ideas, bounce some ideas, help you to do the numbers, or just to figure out, as the doctor says, to find out whether real estate might be right for you. So then that takes us to our Wednesday show, our midweek report. And that, I think, was a very interesting show because we talked about two mega trends basically coming together to further increase the real estate perfect storm that's going on. And when I say perfect storm, I'm talking about a perfect positive storm. The real estate market, we're having multiple bids. We have properties now selling above list price. We've got a very short demand. And we've got this situation here where the big cities are now becoming so undesirable that people are literally, and that's what we talked about, something that they now call the urban flight. And big cities like New York, especially Chicago, Philadelphia, Los Angeles, and other big cities where people are feeling cramped up, too close for comfort, too close for social distancing, that they're seeking. At first, I thought it was temporary, but the purchase desire, the appetite for purchases for people leaving the city is tremendous. Number two is that the DIY or do-it-yourself home improvement trend. It means that more people are fixing up rather than selling, and as a result, that further contracting the inventory, and the balance of supply and demand is completely out of whack. A huge shortage of supply, an overabundance of demand, driving prices up, inventory down. And when you throw in the urban flight to that, you throw in the demographics that we talk about frequently with the baby boomers and the millennials, that you've got literally the perfect storm for no inventory, in spite of a pandemic, a huge unemployment rate, and all of that and the above. So that takes us to our Wednesday show. Now, to go into our Thursday show, which I want to spend a little bit more time on, let's go ahead and take a quick break, hear a few words from our sponsors. We got a lot more for you, and then I have a kind of a funny, humorous thing about the multiple listing, the MLS, the granddaddy mafia of the real estate. We'll talk a little bit about how they are spreading their tentacles in an uncomfortable way here during the pandemic. Anyway, as I mentioned, you're listening to The Real Estate Show. Don't touch that dial. My name is Eric Willner. I am your host, and I will be right back. And it looks like I'm going to have to get out of the Facebook. It's not working. I can't run the radio show feed and the Facebook feed through the same camera. So I'm going to have to opt out of that. Let me see. I'm going to try to see if I can jump in. Let's see if Facebook will let me. I know it's going to happen, and unfortunately, I'm not going to be able to do anything about it again this week. Let's see here. So we won't have a Facebook Live feed again today, other than it's on my personal. I'm going to have to share it from my personal. Yesterday's show was on the personal, and and maybe it's just too heavy for my internet here at home. So there we go. So put in a new camera, and hopefully it will start. It's showing as live, but I think it wasn't getting enough bandwidth in order for it to record. So we'll see. Hopefully that will fix that problem. So we'll see. We might have the second half of the show on our Facebook page. And welcome back. For those of you just joining us, you are listening to The Real Estate Show, South Florida's #1 program about real estate, America's longest running daily radio show about real estate. And as I mentioned before, broadcasting from our 4 local radio stations, 1 AM, 2 FMs. You can also find us on the iHeartRadio. So all you have to do is look for WWNN 1470. That's WWNN 1470 on iHeart. And you can listen to us on the go. And when all else is impossible, you can always go to our website, which might be the first place to go to, at automaticlandlord.com. That's landlord.com, and you can click on the real estate show, listen live there, catch it live, catch it on demand. You can download it in podcast form as well. So however you want to listen to us, we hope you'll take advantage and learn from the real estate show, which is now in its 21st year, educating, protecting, and helping investors out there in the real estate world. So we've been doing our TGIF Friday recap here on the show as we normally do. And we covered through Wednesday. Now we're on Thursday. And Thursday, which was brought to you by the Automatic Landlord Debt Solution, now rebranded as the Automatic Landlord Debt Shredder, as we've been talking about over the number of months, I think. Actually over the years, about the debt solution in its new and evolved form. Now it's the debt shredder, which really is incredible, and it's a powerful way for you to pay off your mortgage in 1/3 to 1/2 the time without having to change your spending amounts. It will show you how to change some patterns, which will help you to pay off your mortgage a lot faster, utilizing the same instruments, same vehicles, without even having to refinance, saving you a bunch of refinance. In fact, one of the other really cool benefits is that we found out that by doing this, we could actually lower your effective interest rate and do that dramatically. So even if you've got a really low interest rate, we can still accelerate the payoff of your mortgage. And so we talked a lot about that on Thursday. Now, in Thursday, we kind of took a step back and reviewed when the pandemic started back in March. I had basically gone into a very focused phase, what I call phase one, for real estate folks, people and it could apply to everybody out there, to be quite honest. But phase one was to cut expenses. When the pandemic hit, everything shut down. The economy went into suspended animation. Everyone that was traveling was grounded. Everyone, wherever country you were in, you might be stuck there for a while. And it was a very sudden, very dramatic stoppage of something of, worldwide proportions. So what was interesting is that it looks like our Facebook camera is in fact working, so that's very cool. I'm sitting here, bring them on camera. There you go. So when we advised everyone, listen, be calm, stay calm. Let's figure out the lay of the land. But number one, first thing I can definitely tell you is, jobs are being lost, left and right, is cut expenses. Everybody, because you don't know if your job is going to be next, and you might not know if your business might not be next. So conserve cash, cut expenses. Those are the two things that I said. Build up cash reserves. And that brought the question about whether you should take advantage of the forbearance. And my advice at the time was only if you have to. If you really need to, then by all means, go ahead and take the forbearance, which is in essence a deferral of making payments. It was the bank, supposedly without affecting your credit, but here is the untold truth. The fact is that lenders that are not refinancing people who went into forbearance, not because their payments are late, but they just don't consider it because you don't have payment history. So you always have to show that your last 12 payments, especially your last 12 payments, have to be on time. Whenever you're trying to qualify for anything, you want your last 12 months payments. There's a little credit tip there, by the way. But what ends up happening, a collateral damage of the forbearance, is that many people who would be able to severely benefit for a refinance now at sub 3% 30-year fixed mortgages. Yes, that's right, I said it. Sub 3% fixed 30-year mortgages. And the problem here is that the lenders aren't entertaining those candidates. So there you go. Now, That was phase one, cut expenses, conserve cash. Then in phase two, and you saw our dialogue evolve here on the Real Estate Show, talking more about get educated. Now, that means listen to the Real Estate Show, because we're constantly giving you stimulus updates. We're constantly giving information about the moratoriums, about the evictions, and the forbearance, you name it. We get the questions a lot of times on our live feeds, a lot of times through emails and on our website and on our Facebook page. And so we address those items, and a lot of the questions we get, I know, pertain to a lot of people out there. So the point right now is hopefully you have a good idea. Now we know, especially after this latest CDC definition of extending the moratoriums out to December 31st, some of the states are following in parallel in lockstep, and so you, first of all, like I said, you've got to go to each one of your states and make sure when their moratorium is. Now, a lot of the states, they have, the federal moratorium ended July 28th, and many of the other ones extended 1 month, 2 months, and I have not seen them all extend. You're seeing between the battle of the Senate and the House of Representatives right now, they're both at odds on how to approach the stimulus. There's a very good chance that there won't be another stimulus before the elections, because you have opposing parties, one not wanting to increase and raise the deficit worse than it already is, and the other party, wanting to spend a lot more freely, kick the can down the road, we'll figure it out, downstream in the future. So now that you've got pretty good education, now that you've got a pretty good sight on where the market is, real estate is strong, the stock market, has been very, very strong. The last couple of days, we've seen a bit more of the volatility, but what we're now starting to see is pretty much what we're going to see. And that neither party wants this economy to fall apart. Certainly neither want to take the blame for it. And I truly believe that ultimately they're going to try to create as soft of a landing as possible. And that would be good all the way around, and real estate will stay strong. Well, so what happens, or what comes next, Eric, in phase three? What do you recommend we be doing then? If we, assuming that we did what we're supposed to do in phase 1 and 2, cut expenses, conserve cash, get educated, you would be very prepared for what will be a spike when the moratoriums and this artificial market, this artificial suspended animation for all things problematic, when that has to go away and eventually we have to face the music and come back to reality, then there will be a spike, and there will be some people who are left more fragile in the marketplace. Now, remember, you and I, the investors, we did not create this problem, far from it. We are there as an outlet, and in many cases, a solution for a lot of investors. So in phase three, what we started talking about yesterday in our About the Money edition of the Real Estate Show is that you ought to really now take a look at paring down any debts, optimizing your financial situation, which is why we talk more about the debt shredder and how it really can do that, make you a lean, mean investing machine when it comes to real estate. And now you got to be prepared, because it's going to be like popcorn. In the beginning, it's going to be one here, one there, one here, one there, and then the pace will pick up. Now, do I anticipate that we're going to have a crash or the number of foreclosures that we had back in 2008? Absolutely not. I do not believe so. I could be wrong, but I don't believe that will be the case. But there will be a window of opportunity that will open up. Remember, right now, we've got a lot of inventory that would suddenly be put on the market, but there's such a high demand right now of people who did conserve cash, cut expenses, and now, thanks to the urban flight, thanks to the DIY trend that we're talking about, thanks to the demographics that we talked about, you're going to see that excess inventory get absorbed a lot faster. And don't forget about, now I'm talking about on the consumer level, think about all of the funds, the hedge funds and the real estate funds, the Zillows out there, and all these different places, including banks, that are much more open to owning. In fact, not much more open, much more inclined to own real estate. And if they can pick up some good bargains in the process, they certainly will. So Thursday, the message of the day was to shred debt, start buying assets and building equity. Those two things, in fact, the shredding debt builds equity, buying assets at a discount builds equity, and that's really what we're looking at. And it's one of our Facebook viewers says, yes, right now we're in a fake economy. And so get ready to there's going to be a transition. While the economy underlying seems to have a decent amount of strength, there will be a sudden jolt. There'll be, always there's an overreaction to the one side and then an overreaction to the other. And therein lies the opportunity that's ahead of us in the next 3 to 6 months. That's right, in the next 3 to 6 months. So get ready. Today, there's our summary for the day. There's a lot of great information in there for you to get ready. If you'd like to call us for a complimentary, no obligation strategy session, give us a call at 888-595-7779. That's 888-595-7779. Or contact us on our website at automaticlandlord.com. That's automaticlandlord.com. All right, well, that's it for today. Thanks again for listening. Remember to press share on wherever you're listening to, whether it be on our YouTube channel, on our Facebook channel, and help us to get the word out there so more people are helped. Well, that's it for today. This is Eric Willner signing off. Make yourself a very wonderful weekend, and God bless America. Thank you, man. Have a great weekend. So that's it. We are now done there. Thank you. Thank you. And I want to thank everybody who joined us. First, I'll say goodbye on our YouTube. And we got some nice likes. Remember to share and like that as well. Thank you. Even though that's in our pre-launch stage. Thank you. And then on